On today's episode, what pilots need to know about the new group variable universal life insurance option with special guest Jonathan Roman from the MetLife Insurance Company, along with Scott Bowles and John Doherty from the Retirement and Insurance Committee and Captain Jason Depew. Here's your host, Ryan Argenta.
Welcome back to the Engage podcast. Today we're talking group variable universal life insurance policy. We'll call it GVUL going forward. And this is the newly negotiated new contract option for life insurance for Delta pilots, in addition to the term life insurance policy provided by Delta Airlines. As thrilling as this is super important and a lot of information coming out because Delta pilots have to opt in during open enrollment November 1st to November 17th of 2023. So our goal today is to give you as much information as possible on the GVUL and on our current setup so that you can make informed decisions. You can share this podcast with your family, with your friends, with your financial planners and advisors, and really get that information that you need to make an informed decision. Before I get ahead of myself, I want to introduce and welcome back from the R&I, the Retirement Insurance Committee, Scott Bowles, John Doherty, and a very special guest directly from the MetLife Insurance Company, the GVUL expert, Mr. Jonathan Roman. And we also have, and welcoming back, Captain Jason Depew, a Delta pilot and prolific author on all things pilot finance. Gentlemen, thanks so much for being here.
Thanks for having us.
Of course, I've got a disclaimer to read from our attorneys. Here it goes. This podcast does not constitute an official position or advice of the Airline Pilots Association or the Delta Master Executive Council. The information provided in this podcast does not and is not intended to constitute legal advice, tax advice, or financial planning expertise. All information and content presented are for general informational purposes only. This is also not intended to be a complete description of the insurance benefits available in the plan, nor is it a recommendation from MetLife as to what benefit decisions you should make. For complete information about the term and GVUL insurance plans, please go to www.metlife.com/GVUL/Delta Airlines. That'll also be linked to the description of this podcast. End of statement.
Let's talk insurance.
Sounds good.
So before we really roll our sleeves up here, I want to go to the R&I guys because what is our current insurance setup? We have term life insurance that's provided by the company. And what are those amounts? What does that mean? Who's paying for it? There's terms like imputed income that we pay at the end. What does that mean? And what's our current setup?
Great question, Ryan. So we have term insurance that is calculated at 2,500 times the highest captain's hourly rate. And that adjusts as the contract pay rates adjust. We had a 2.012% increase last Friday, and we just did the math on the new pay rates. So 1,118,000. That's a mouthful. Got it. Good thing you're
okay.
So the current term policy that's provided by the employer is a factor of 2,500 times our highest captain's rate. And for 2024, that'll be just a little over 1.1 million of term insurance. In order to pay for that term insurance, a company is limited to only $50,000 of free insurance to any employee. Any amount over $50,000 is subject to what is known as imputed income. And this is something that each pilot will see on their paycheck. And when the income is imputed, you don't actually earn or you don't actually are charged that amount of money as simply an imputed amount to your total income, and you pay taxes as if you were earning that additional amount of money. So the 1.1 million in term insurance will be replaced with the exact same value under the GVUL policy.
Okay, so it sounds like our current setup is a term policy worth for 2024 a little over $1.1 million in a death benefit. That's equivalent to 2,500 times, 2,500 times the highest 12-year captain pay rate in the PWA, right? And my understanding is the company pays the premium, but the IRS says anything over $50,000 of death benefit, you've got to pay taxes on that through this imputed income. So I'm looking at my pay stub, and under non-wage earnings, it says basic life imputed income, and I've paid year to date $844.90.
So while it appears you paid $844, what has actually happened is your income has been imputed or plus up to the tune of $844, and you're paying taxes at your tax rate on that additional $844 of sort of fake income, if you will.
Okay. So moving along, like this is term, right? So the term policy expires at some point. So can we take this with us after retirement, after age 65?
You cannot take the whole $1 million plus policy. There's step down ladder in the contract. It goes to 250,000 your first year of retirement and drops down 50,000 a year every anniversary of your retirement until eventually it gets to $10,000, which then stays there for life.
Okay. Jason, you have your hand up.
Delta's no longer paying the premiums after you're retired.
Delta's contractually obligated to continue paying those premiums in the step down. You will still incur imputed income also in retirement on anything over $50,000.
And just to back up one, Brian, you pointed out what your current imputed income was, the $844. Those imputed income tables are based on 5-year age bands. So 25 to 29, 30 to 34, et cetera, all the way up to 60 to 64. And they do get noticeably more expensive, more chronologically gifted you become.
Yeah, I like the way you put that. But yeah, I am looking at the tables from the GVUL, and we'll get there in a second. But essentially, if you're 65 years old, it's an additional $15,000 of fake income, right? That imputed income.
Correct. And just a point there to keep it accurate for everyone that since you're not able to fly on your 65th birthday, the tables, as far as we're concerned today, expire at the end of your 64th year. So we don't actually quite get to that really egregious 65 to 69-year-old band. We stop at the 64-year-old level.
Okay, makes sense. So that's our current setup. Anything to add to that before we dive into what the GVUL offers?
You do have the ability to have lower insurance amounts. There's currently about 500 pilots that have elected that just because the imputed income in their minds is too expensive for what they actually need.
And you can opt back up if you opt up more than 25,000 in any given open enrollment. You are subject to what is known as evidence of insurability. And that's just making sure that you're not facing a short-term life scare, so to speak, on the health side.
Okay. So we've negotiated in a contract 2019, which is kind of a misnomer because it's 2023, but our new contract, our negotiators and you negotiated in this GVUL coverage, this option for Delta pilots. So is that an additional option in addition to the term? Is it switching completely out of the term boat? And why did we do this? What's wrong with the current system?
Well, great question. As John was pointing out, we have had several pilots that have opted out or down from the current term insurance. And several of those folks that have opted down may have done so because they viewed the imputed income as an actual cost, not that they were simply paying taxes on that portion of their income. So we were tasked with coming up with a better product going forward that would reduce some of the imputed income costs for the pilots and afford some additional portability as they go into retirement. And then on top of that, the GVUL has an investment component opportunity as well, and we'll cover that a little bit later. In the end, the GVUL is going to give every pilot an opportunity to save on the imputed income with the same death benefit. So you asked if it was an entire switch from term to GVUL, and I would say mostly. The first $50,000 that we receive, what the IRS allows to be provided from the company gratis with no imputed income tax, will still be term insurance. So the roughly $1.1 million, 50,000 of that will be term insurance. And then the roughly $1,050,000 will then be GVUL insurance if, and this is the foot stopper, if you opt in to the GVUL plan.
Okay, so nothing is forced here. We're not automatically enrolling pilots. Each pilot gets to make their own decision during that open enrollment window, again, November 1st to November 17th. And it is a two-part process. One is you opt in through the Delta Health Benefits page, and then you have to enroll and fill out an online application with MetLife. But action required by each pilot to opt in. And if you don't opt in, what's the default?
So the default is the same thing we have today. And you will always have the opportunity to opt in next year if you happen to miss this year, but you will be subject to the higher cost via the imputed income if you remain with the term insurance. And that applies to each and every one of us.
Two-part process. If you do not complete both steps, you default back to the term.
Okay. So if you don't do the two steps, you would miss the boat for the 2024 year, but in 2025, again, during open enrollment, November 1st to the 17th, 2024, you could then enroll. And a small asterisk here, what if you're an inactive pilot? I think it's a one-time opt-in now, November 1st to the 17th to get in.
That it's correct. If you're inactive, they're extending a one-time option. Of course, if you were to become active again, you would have that option again. But for the inactives, that currently it's a one-time only option.
Okay. Well, let's roll up our sleeves and put Jonathan to work here. Jonathan, what is the GVUL? And give us the broad strokes here at the base level.
Sure. So thanks for having me on the podcast today. So just a broad level, term insurance, as Ryan kind of alluded to early on, it's for a term, and your term in this instance is your employment with Delta. So that's how the term insurance is. The GVUL is what we call a permanent life insurance product. And it's permanent, meaning that this type of policy can stay with you until age 100, as long as the premium payments are paid with no further underwriting or application process. So it's permanent in that sense. And then it's portable, which also is going to differ a little from the term insurance. Portable meaning you can take this policy with you when you separate from the organization. So if you left Delta for whatever reason, the GVUL policy would go with you. Then it also has the really unique feature, the investment feature, that makes a pretty big difference as well. So the GVUL has what we call a side fund or a separate fund that you could put extra cash into if you would like. That it's an optional feature. It's not mandatory. So you can put extra cash into it, and then that cash would accumulate interest. So there's variable funds that interest rates would vary with the market. And there's also a guaranteed fund that Delta's worked out with MetLife that would never go below 1.5% interest. But actually right now it's paying at a 4% interest. So those are the biggest unique qualities. The last point I would also make with the GVUL versus the term, usually group term life insurance, the organization owns the policy and the individual is just the insured. With GVUL, you're the actual owner of this policy from day one, and Delta is just paying for it for the pilots. So you actually are the owner of the certificate and the policy the day the policy is established. So those are the broad stroke, high level differences with GVUL and term.
Okay. Yeah. So it sounds like it's quite similar in the coverage aspect or the death benefit aspect. The premiums are still paid by Delta. The imputed income component is significantly reduced for various reasons. It's portable. So now when you retire, you can take it with you. Does Delta continue to pay those premiums after you retire, or you're now responsible for the premium?
So great question. If you port the policy, you would move to what we consider as a direct bill status. So you would now be responsible for those premiums. Now, this does not interfere with the retiree benefit that John and Scott were speaking to earlier. That benefit does not change. So if they retired, they would still have that retiree life of $250,000. They would still have that being paid for by Delta. Nothing changes with that retiree life benefit. The only difference is they would have the choice to port the GVUL. And if they made that choice, they would now be responsible for those premiums for that policy going forward.
Okay. So no change to the retiree benefit. Delta pays the premiums after retirement for the 250,000, the step downs, 200,000, 150, 150,000, all the way down to $10,000 for life. Any additional coverage in retirement, if you want more than that, would be at the responsibility of the pilot, the retired pilot, to pay those premiums, right?
You're correct.
Okay, good. So if you just want the insurance aspect, not a big deal to go into the GVUL and probably reduced imputed income there. And we have the disclaimer at the beginning, we don't give financial advice, financial planning. And I do want to mention Jonathan, although he works for MetLife, he's not selling anything. He's already sold it. The union, the company bought it. The price has been paid. So it's not necessarily a more the merrier aspect for Jonathan. And there's no financial incentive for anybody here to pitch this. This is just getting out the baseline information.
Right. And can I touch on one other thing, Ryan?
Yeah, please.
This is another point, and you kind of brought it up a few times. The difference in imputed income, as that I think was a concern for some of the pilots as well. So even if it's somebody just choosing the life insurance, right? They don't really know if they want to invest now or not. But if we're just looking at the imputed income piece, the way term insurance is taxed, it's taxed on a Section 79 table with the IRS looks at it. And what that really is, they look at the coverage amount, and then there's basically bands of income that they're going to add to you at the end of the year. So that changes what your income looks like, as mentioned with the imputed income. With GVUL, it's a bonus 162 plan. So everything that comes into the GVUL is on an after-tax basis. That's for premiums and for any investment dollars if somebody chooses to do that. And so when they do that, the extra income that gets added at the end of the year to a pilot's salary is dollar for dollar cost of insurance. So that's why it's a lower amount. So for instance, just to give you like a 35-year-old, for instance, if they had the max 1,068,000 in coverage, and we're using that number because we're reducing the GVUL by 50,000. So the 1,068,000, they would have an extra $1,153 added to their salary at the end of the year, to their income when they're looking at their tax. With GVUL, they're only going to get added $346 because that's what the cost of insurance actually was. So it's dollar for dollar. It's very easy to calculate when you're looking at the extra income that goes into it. In GVUL, when it looked at as term, the government has placed these different bands based off coverage amounts. And so based off the coverage amount, that's how they look at it. So that's why term insurance, the imputed income is normally a little higher in regard to a GVUL product.
Okay, that makes sense.
Just to jump in, if the entire pilot group were to elect this product, it would be about a $30 million savings for the group as a whole
In 2024.
in 2024.
Okay, that's significant. Jason, I want to go to you. You've written quite a bit on financial tools, investments, and life insurance. Retirement plans has been one of your fortes. So I want to separate the GVUL into the life insurance part and then the optional investment part. But Jason, as far as a pilot is concerned for the life insurance aspect, what's your take here?
I have a hard time seeing a downside of the life insurance part. It's the same benefit. The company still pays the premiums. It's just more flexible. You can take it with you, and then the investing piece. It might also be worth giving our thanks to the R&I committee and the negotiating committee. Our benefit is 2,500 times top line captain pay. Our nearest competitor, their benefit is 2,052 times their current category. So a 717 FO equivalent is getting a lot less coverage than what we get. So it's really great coverage. I think the investing piece is really cool too.
Okay, so maybe that's a great segue. Jonathan mentioned it already that there is an option to invest, whether that's in a fixed interest rate of return or whether it's a market-based investment. Jonathan and Jason, let's banter about that because this is what charges me up as a pilot. This is where I want to roll up my sleeves because we're at a point in our careers where we've arrived, right? We're making good money. We have these options. We have things negotiated in our PWA to help us place money. And so the GVUL seems like an opportunity to sock away money in a tax-deferred way that would help me in retirement. So let's talk the investment side of that now.
As you mentioned before, you have the variable funds and then you have the guaranteed fund. And so with every dollar that comes to GVUL, what I mean by that is every dollar that comes into the GVUL. So regardless of investing, every premium dollar plus investment dollar increases what we call your cost basis. And your cost basis is that tax piece that you're worried about not owing the government any money on it. So when you're leveraging the investment side, with the way the GVUL is operating, it's using your cost of insurance. So it's using the premium dollars for the life insurance piece to help offset your earnings on the investment side. And so if you, let's say you're investing every pay period, you're putting in an extra $300, $400, $500 into the investment side, and that's accumulating, right? So that investment dollars are growing your cost basis. And then Delta's paying for those premium dollars for your coverage. So every dollar they're putting in where they pay those premiums increases your cost basis as well. When I explain cost basis, I like people to understand that cost basis is not a tangible dollar amount. It's more of a measurement of how much of your cash value you can pull out without paying any taxes. So let's say you had $20,000 in your investment side, right? And you had $7,000 of earnings on that money. So you have $27,000 of cash value. So your cash value is going to be your earnings plus your investment. So you have $27,000. Then you had this policy for X amount of number of years, and Delta paid in $8,000 in premiums over the X amount of years for the policy itself at this point. So your cost basis is your premium dollars plus your investments, which was the $20,000. That's $28,000 of cost basis and $27,000 of cash value. So if something comes up, you want to buy a new car, remodel your house, whatever it is, you wanted to gain the $27,000, all $27,000 would come to you tax free, even though $7,000 of that is earnings. So if you had $7,000 of earnings, and let's say like some other investment account, you're going to have a capital gains tax that you'd normally pay on those earnings. You don't have that within the GVUL at all. So whatever money you're taking out, as long as it's at or below that cost basis, comes to you all tax free. So that's another huge win when you're leveraging the investment side of the GVUL.
Okay, this is what I like is life insurance pays out the death benefit when you're dead and you're dead, so you can't enjoy it. But this is life insurance that's working for you while you're alive.
Yes. And just so you touch, that's a great point. And so that's when you hear the GVUL sometimes. If any of you joined my education sessions that I'm doing in October, November, and December, we share this, we call it the living benefit. You have your death benefit, which every life insurance has the death benefit. That's the 1.1 million of coverage. But then GVUL has the living benefit. And the living benefit is the portion that Ryan's referring to, that this cash that you have access to while you're still living, if you're leveraging the investment side of it. So you have the living benefit portion of a GVUL.
Hell yeah, man. Buy the sports car while you're alive and then keep your family going when you're dead.
Just a quick question on that. So if you pull out some of your cash value to spend while you're alive, does that change your death benefit at all if you were to suddenly pass away?
A great question. Think of your death benefit. Think of it as your minimum death benefit when in reference to GVUL. So if you guys have the maximum amount of the 1.1 million and change, that's your minimum death benefit. Okay. It's never going to go below that. If you passed away, your loved ones are going to get at minimum that amount. Now, if you're leveraging the investment side of the GVUL, you're not only have a living benefit portion that cash you'll have access to today if needed, you're also increasing your death benefit without any further underwriting or application process. So if you invested now over 50,000 or whatever the case may be, your death benefit's going up by that much. So if you passed away, your beneficiaries are now going to get the 1.1 million plus whatever cash value, and all of that goes to them tax free. So when the policy ever gets activated for death benefit reasons, everything goes to your loved ones tax free, regardless of cost basis.
Okay, you're going to get the death benefit no matter what. And then every dollar that Delta puts into premiums for your plan, that gets credited to you as reducing your taxes in the future. And then if you use the plan to invest, any gains on that investment, the tax on those gains will be reduced by the amount of premiums that Delta put in. That's a big benefit.
Yes. And another thing, let's say you guys are really savvy with your investments and your earnings outpace what the cost of insurance was. So your cash value grew past your cost basis. It's still not a bad thing. You can take your money out up to your cost basis if you really just don't want to pay any taxes on those dollars and leave the remaining portion there to continue to grow. But you have a few different options of what to do with that portion above the cost basis.
And Jason, if we can add, that was a great question, because that's a common one. We get kind of a little misunderstanding that if you do nothing other than opt into this plan, you have the same death benefit as today on the term side with no cash balance accrual, but you also have the ability to invest at the pilot's option. So no requirement to do so, no necessity to have any cash value to achieve the full death benefit, but you do have that option, and it was all about optionality.
So basically, you could do this on your own with a brokerage account. You could call up our 401k provider Fidelity. You could call Vanguard. You could use the Robinhood app and set up a brokerage account. And you could take your own money out of your paycheck and invest it in there and buy stocks and mutual funds. And then someday when you cash it out and sell those shares, you're going to make money. And you're going to have to pay capital gains tax on the money you made. With some caveats that we'll talk about in a second, that's exactly what this is, a brokerage account just like that. Except that every dollar that Delta puts in, that reduces your future tax burden. That's the real benefit of this kind of account. Now, there are a couple caveats there. I think we need to talk about the fees, and we need to talk about what we can invest in with this fund.
Yeah, for every investment, there is a 2.25% expense charge. So let's say someone invested $100, $97.75 would be allocated however they chose to have it allocated. And $2.25 would be the expense charge. And those are really because of the different state taxes and fees when you have the different investments. So we're just passing that through to the end person, but that's what that is. And if we look at the guaranteed fund account as the example, right, that has a 4% interest at this moment in time. And I know it's not one for one, but you could recoup that money relatively in the future, just looking at that fund alone. So it's not a huge hit, but there is an expense charge. So that is a great point. The other thing, the withdrawal fee, which that is very minimal. So that's a 2% or $25, whichever is the lesser of the two. So you would never pay more than $25 when doing a withdrawal of your money. So that's the other kind of fee that would be associated with this type of account. But those are really the only two. You have the expense charge with the investment dollars coming in, the 2.25%, and then a withdrawal fee if you did those.
Now, if I have a brokerage account at Fidelity or Vanguard or somewhere, I can buy whatever kind of stock I want. I could buy Delta stock. I could buy mutual fund. What fund options do we have to invest in the investment side of the GVUL?
So it does have the full gamut of funds, like your high risk growth oriented portfolios, and then your lower ones like bonds and things of that nature. There's 20 different variable portfolios and then the guaranteed fund account.
Okay, so 20 options to choose from plus a guaranteed fund. Looking through the materials, and maybe we should mention it now. You can get a lot of information about all this at metlife.com/GVUL/Delta Airlines. That's our custom page, right? Is there a place to see the menu of investment options right now, or will that not be available till after we opt in or out?
It will be on the MetLife site that you're going to see on.
And that's a great point. I'm going to link to the description of this podcast. So you can pause now and go back out. And in the description, we'll have links to a lot of different documents. One is that website that Jason just mentioned. Also a link to the R&I handbook, which references a lot of this.
Bottom line, before you make investment decisions, be sure to check out the investment options and the associated fees in the literature provided by MetLife.
We're also going to have the schedule for Jonathan's webinars that he's going to be presenting over the next couple months. Basics of GVULs. The bottom line is when you have questions, you can email R&I, you can submit a DART, probably the best way, dart.alpa.org. You can also call 1-800-USA-ALPA, which is the Delta MEC, and ask for retirement and insurance or tell them you have a GVUL question. But those will all be linked to the show notes here.
So a question I wanted to address with your cash value, different uses and different strategic uses of your cash value. Just to touch on this at a high level, there are loan provisions within the GVUL. So if anyone's ever looked at loans on like retirement plans, it's going to operate very similar. The other thing with the cash value, the original purpose of these plans back when they were created in the late 50s, early 60s was to get these life insurance in your healthier years. You get this permanent product in your 30s and 40s, and then it's also usually your high earning years. You would take these policies out, stow away money with no intention of ever really pulling it out of the side fund. What you would do is they would build up that cash value. As we all know, life insurance gets more expensive with age. So when they get to that retirement age, they would now use their investment dollars and tax advantage dollars to pay for the premiums of this life insurance policy. And that was kind of the original intent, was that they would build up a nice nest egg, and then they would say, okay, now I'm on a fixed income. I don't have as much free flowing cash to pay for this, but I can't get rid of my life insurance yet. With the cash value I built up, I can now, the policy can pay for itself for the next 12 years. And that's what they would basically do. But with everything, and I touched on this a little earlier, was the wealth transfer mechanism is the other use of cash. The last piece, and this kind of touches on what you can do with that retirement. Let's say somebody retired, they built up a nice cash value, but they didn't feel the need, they needed the life insurance piece anymore. But they didn't want to lose those tax advantage dollars they built out through the investment. One thing that people can do is they can 1035 that money into an annuity. Here at MetLife, we just have an immediate fixed annuity option. So what that really means is they have to start taking distros within the first 12 months, but you don't have to use our product. So if they went to a carrier elsewhere, as long as that annuity can support 1035 exchange, they could basically drop the life insurance portion, 1035 of their cash value into an annuity so that it does not lose those tax advantage dollars. And then however that annuity is set up, they could take distros on it whenever it is set up. So that's what the biggest thing is. If they're leveraging the cash value side of the GVUL and they retired, no longer needed the life insurance portion, they can 1035 that money into an annuity and then drop the life insurance piece.
Okay, we've definitely gotten into the varsity level aspect of this, and I kind of want to re-summarize some things. But Jason, as far as pilot strategy here, it could potentially be overwhelming with the number of vehicles that we have as pilots, right? We're at a great point in our careers where we can quickly accumulate savings and investments. Do we really need a large, expensive insurance policy later in life or towards retirement? Now we've got things like the market-based cash balance plan. We've got now the GVUL. We've got the 401k. You can super Roth backdoor, triple stamp, the double stamp thing. So we've got all these exciting things, and John and Scott they're laughing, but they're experts at this. But as you're listening to this podcast, it's like, do I really need another investment option? And I feel like it can't hurt. But Jason, what are your thoughts from the pilot perspective? What's the strategy here?
Yeah. And none of this is official tax or investing advice, obviously. I love to maximize my contributions to tax advantage plans. So IRA, 401k, TSP, HSA, depending on which of those you have available. The life insurance part of this is great. Delta pays for it, and there's no real drawback to that. And then the investing piece, even if all you want is a savings account, if all you're doing is expecting that the value of your investments is going to increase over time, it's an advantageous savings account because your cost basis goes up according to it, including Delta's premiums. So as long as you think your investment returns are going to be enough above that 2.25% front load, and you can just use it as a savings account, put money into it, pull money out, and it's going to probably yield a little better than the traditional savings account. Right now, there's some high yield savings options that are pretty good, but it's pretty close to that too. So it's definitely a great vehicle. And if you go talk to your professional financial advisor about this and tell them the options, they'll give you a good idea whether it works for you or not, but they'll probably have a good opinion. They'll probably say this is a good option for you to stash some money away.
Yeah, and
I
you say
think
it could be used as a savings plan. You've got to beat that 2.25%, right? But could it be used like for college savings? Maybe you have a 529, but in addition to that or replace that, just trying to think outside the box of options for pilots here.
Yeah, why not? Or there's always a debate on, should you pay your mortgage off early? Are you better paying that off at whatever it is, 3%, 5%, or investing in the market and taking a higher percentage and then paying it off later? Well, you could make this your house payoff fund, right? And every month you deposit extra into the investment side of your GVUL, let those investment dollars grow. And then eventually it'll be the same amount as you owe on your mortgage, and you can cash it all out right there and pay your mortgage off and you're done. There's a lot of options for what you could use that fund for.
Or buy a boat.
Or buy a boat.
And I think what's really nice, to piggyback on what Jason was saying, is that could be your plan, right? But as we all know, life throws curveballs at you. And sometimes when you're putting that extra money into like a retirement plan or something of that nature, you're tied to those time horizons. Otherwise, you're going to have a huge 10% penalty pulling out your money early. With the GVUL, if you're throwing a curveball and you need that cash, you can take it out. There's no early withdrawal fees or penalties. So you still have the liquidity of the account to get that money out if you need it for something else that wasn't a part of the plan. And I think that's a huge thing. And then the other thing, for a pilot asking himself that question, right? I have my investment portfolio already set up and I have all that worked out. Well, if you're just looking at the life insurance piece, yeah, one for one, the death benefit is the same, but the difference here is your taxable income is going to be lower if you're in the GVUL plan. So if you're just looking at that, if you're just looking at the baseline there, there's still a benefit for people who maybe don't think they need the investment side. And then it doesn't hurt to have the option if you ever choose to invest later.
Very good. I do want to turn back to Scott and John, the R&I committee, because they were a huge part of the negotiating process. And our negotiators, as Jason mentioned, did a really great job, hours and hours of negotiating here. So our hats off to them and our thanks and gratitude for sure. Here's my thought. What does the union get out of this? Why does the union want us to have a GVUL? And I've noticed the company is actually pitching this pretty hard. They've got webinars coming up. They've teamed with MetLife. They're getting the information out. I got a package in the mail the other day. What's the advantage to the company and why do they want Delta pilots to opt into the GVUL?
Great question. Well, from the Alpha perspective, which is really all we can speak to directly, there is no benefit to Alpha per se in pilots choosing either the term or the GVUL outside of just knowing that we would have satisfied polling results and survey results, et cetera, that we were tasked with back shortly after contract 2016. So it's been a long process to develop something that was not harmful to any as far as we can determine, but potentially beneficial to all and certainly a lower cost to all. So it really is a win in that respect.
Really, it's a win for the individual pilots is the tax piece. I got the vibe they just wanted to offer options. So it gives pilots another choice in life insurance, but then another place to invest money if they needed one.
Yeah, and that's okay. And I just want to ask that question because that's where my mind goes, right? I don't like a sales job. That's not what we're trying to do, but I want to understand all the aspects. But it does sound like through pilot polling and pilot feedback, they've been asking for these vehicles for years. And we're finally now just seeing it come to fruition. So that's an important piece here. But again, at the end of the day, it's an option for you that is now built into the PWA. You don't have to take it. No one is forcing you to do it. We're just giving you the options. And so, yeah, if this feels forced, it's not for me, I don't like it, or your financial planner or advisor says it's maybe not something for you, then no big deal. Don't do it. So what are we missing here? We talked about the life insurance aspect of it, the death benefit, and then we've talked about the investment aspect of it, also optional. Is there anything to wrap up here, Jonathan? What are we missing? What do you want pilots to know?
I think something important to know is that for these next couple of months, just try to pay attention to the Delta emails that'll be coming out, and also got you guys in front of the microsite. There'll be one around November 1st. That'll be the kickoff for your open enrollment. Then we're going to narrow down those communications. So we're not trying to inundate you with emails or anything like that. It's just mainly those 2 emails. Then there's also going to be a packet being mailed. That's going to go to your home address. That'll just have some more information about GVUL, the education session, so on and so forth. But then there'll be further emails when we kick off the second enrollment. But those emails are going to be targeted for people who made the decision to go with GVUL, because we don't want you to forget that second enrollment. So there'll be emails going out November 27th. And then I think week after week for people who haven't completed their second enrollment yet, they will get an email you probably in the beginning of the week letting them know, hey, you haven't completed it. We see that you made a decision, but you haven't completed it. And then the education sessions. I know we went into some high level things here. We got to a little bit of the nitty gritty, but if you want to go into a deeper dive, I do have education sessions coming up in October, November, and in December to really try to dive in deep here into the GVUL.
Scott, John?
One last comment, just please remember to list your beneficiaries and keep them updated. One important piece, in addition to everything else we mentioned on the GVUL, is obviously the pilots as of today that are actively flying, they've got a class 1 medical. Things look pretty good on the health perspective. The term insurance gives you some options based on the contract with the step downs that we previously discussed as you go into retirement. However, the GVUL gives you some portability options. So if you happen to reach the end of your career and there are some health outcomes that may not be so promising, and you want to continue to have that death benefit available for your family, should things not work out for you, this gives you a much more predictable portability path to take that forward in a more affordable way. So it's just something to keep in mind. Not everyone's going to have a really healthy retirement, I'm sorry to say. And on any given day, we tend to have about 5% of our pilot group that's out on some form of disability. So things happen. And that's why it's called insurance. So just keep that in mind as you look at your options.
Very good. Maybe this is a dumb question on my part, but under our current plan, under the term, you can elect lesser than the negotiated max, right? And then you pay less in imputed income. Can you do the same thing in the GVUL? Can you say, I don't need 1.1 million, I want 500,000, and that'll even further reduce?
Yes. The way it's set up is identical. Long story short, the benefit is 1 for 1. So however much coverage you have in term, you can elect to keep that. So let's say somebody who's in the mid tier, they have 300 in coverage. If they try to go and they now want GVUL during open enrollment, that amount above, there would be an underwriting process they would have to go through if they're trying to increase that coverage. If they're keeping their coverage the same, there's no difference. There's no further medical review or anything of that nature. But if you are going from 300 and they're trying to take that 300 to GVUL, no further EOI or evidence of insurability.
It would be an exam, right?
Their coverage, there would be that medical underwriting that would take place.
Okay. So I've got the full enchilada with the Delta term insurance. This is hypothetical at the moment, but I want to opt in and enroll in the GVUL through MetLife November 1st through the 17th. I opt in, then I enroll, 2-part process, important. You can change your option every year. You can opt out, you can opt in, unless you're inactive, in which you have the 1 shot this year. And if you got the whole enchilada in the term and I move the whole enchilada to the GVUL, no big deal, no exams, no changes, off we go. Great.
Correct. Going back and forth, if you're leveraging the investment side is not a huge benefit, you can do it. Absolutely, you can do it. But think in the mind frame that if you were in it for a year, you invested some money, now you go to term, the following open enrollment, you're going to have to take that cash value out. So it's not real beneficial to bounce back and forth like that, but you absolutely can. You're correct during open enrollment season.
It used to be that there was a strategy piece with the old plan, the term plan. If you wanted to pay less in imputed income, you could reduce your death benefit, your coverage. At this point with the new plan, since our imputed income is going to be so much lower anyway, there's much less advantage to reducing your coverage because it won't reduce your imputed income very much. And you'd be reducing the cost basis of your investments if you decide to do that part in the future. So you're kind of hitting yourself twice if you choose to reduce your benefit. You really just don't need to anymore, which is great.
And I do think another question that's come up a couple of times I've heard is when you choose GVUL, you're going to have that first 50 in term and then the remaining portion in GVUL. Can people choose the amount they want? They don't have that ability. So when you choose GVUL, the first 50 is in term and the remaining portion is always going to be the rest in GVUL. You can't basically say, I want 250 in term and 250 in GVUL, just to kind of level set there.
Very good. All right. Sounds like GVUL, one policy, two benefits, life insurance, investment. It combines value, life insurance protection with a tax-deferred investment feature. You can take it with you. You can take loans and withdrawals from your cash value at any point. Delta's paying the premium. That reduces the amount of tax that you have to pay to the IRS. Sounds like a win, but to be determined. Again, all the information that you need linked in the description of the podcast. Jonathan Roman of MetLife, thank you so much for being here. Thanks for the information. Scott Bowles, John Doherty of the Retirement Insurance Committee, thank you both for the work that you've done for all the pilots, and thanks for being here today. And Captain Jason Depew for your 2 cents and volunteering, and the COM committee. We appreciate it. Thank you all very much.
Thank you. My pleasure.
You're listening to Engage, the podcast for Delta pilots. Follow us on Spotify, Apple Podcasts, or your favorite podcast platform, and receive notifications when a new episode is available.